Welcome to Market Briefs. Here's your daily market summary for May 19th, 2026. Stocks edged lower. Global bond yields surged on a hot UK inflation print. Silver got crushed and oil stayed bid as the US-Iran ceasefire continued to fray. The S&P 500 fell about 0.2% to 73.53. The Nasdaq slipped just over 0.5%. The VIX Volatility Index ticked up to 18, still pretty calm. But under the surface, the tape was deeply split. Artificial intelligence chip makers ripped higher. Astera Labs jumped over 13%. Marvell, SanDisk, and Ciena all gained 4% or more. Meanwhile, software, ad tech, and solar names got hit hard. Akamai dropped 6%. Roblox, Pinterest, and Trade Desk all fell about 5%. The market is rewarding the companies that build artificial intelligence infrastructure and punishing the ones that have to spend on it. Bond yields jumped today, and not just in the U.S. The U.S. 10-year Treasury rose to 4.67%. But the bigger story was offshore. The U.K. 10-year gilt climbed to 5.12%, the highest level since 2008. Japan's 10-year jumped over 2.5% on the day. The trigger was a hot UK inflation print. Consumer prices in Britain rose 3.3% year over year, well above the 3% forecast. That's the first reading reflecting the energy pass-through from the Iran war, and it spooked global bond markets all the way across the curve. Precious metals took a beating. Silver dropped over 5%. Gold fell almost 2%. Why? Real interest rates, meaning rates adjusted for inflation, surged today. When real rates rise, gold and silver lose their relative appeal because they don't pay you anything. Add in a stronger dollar and the fact that silver was a very crowded trade after a huge 2025 rally, and you had the perfect setup for a flush. Hecla Mining, a silver miner, fell over 5% in sympathy. This is textbook gold real rates behavior. Oil stayed firmly bid. West Texas Intermediate gained 1.5% to $104 a barrel. Brent crude rose to $111. The spread between Brent and West Texas widened to over $7 a barrel, which is elevated and suggests the global oil market is tighter than the U.S. market. That fits with what we know. Iran has been blockading the Strait of Hormuz, which carries about 20% of the world's seaborne oil. Natural gas also jumped 3%. Liquefied natural gas exporters like Venture Global and shale gas producers like EQT both rallied around 4% on the day. If the Brent to West Texas spread keeps widening past $10, expect knock-on effects in jet fuel, heating oil, and fertilizer prices. Bitcoin finished the day essentially flat near $76,900. But under the hood, the news is grim. Spot Bitcoin exchange-traded funds saw about $1.6 billion in outflows over the past 5 days. On-chain data shows almost 11,000 Bitcoin moved onto exchanges over the past week. That's bearish supply pressure. The cryptocurrency Fear and Greed Index hit 25, which is the extreme fear threshold. Now that's a contrarian buy signal historically, and the macro setup is supportive. Real interest rates after inflation are barely positive, which is what we call a stealth easing regime, structurally bullish for Bitcoin. But the flow data says real distribution is happening right now. The macro is in place. The price action is not yet. Be patient. The Federal Reserve's preferred inflation gauge, core personal consumption expenditures, is running at 3.2% year over year and accelerating. The Fed funds rate sits at 3.64%, unchanged since April. That means real interest rates after inflation are just 44 basis points positive, effectively flat. And every month inflation keeps drifting higher while the Fed stays on hold. The policy stance becomes less restrictive in real terms. That's a stealth easing setup, even though no one is calling it that. Watch tomorrow's release of the April Fed meeting, minutes at 6 p.m. Eastern, for any hint on when actual rate cuts might restart. Underneath the index moves, defensives bid quietly. Utilities like Pacific Gas and Electric, Edison and Consolidated Edison all gained 2 to 3%. McDonald's, AstraZeneca, Merck, and Amgen all showed up in our deeply oversold screener. These are exactly the kind of names that lead when a late-cycle equity tape rolls over. The Nasdaq's relative strength index is sitting at 65, getting close to overbought on the daily chart. Worth watching whether the AI chip rally needs to cool before the broader market can move higher. The next big catalyst is tomorrow afternoon. The April Federal Reserve meeting minutes drop at 6 p.m. Eastern. Markets will scour the text for any clue on when the next interest rate cut might land. Currently, the market expects just one cut for 2026, with the next not coming until 2027. A more dovish tone would push the dollar lower and gold higher. A more hawkish tone, emphasizing the Iran war inflation risk, would do the opposite. That's your Market Briefs daily summary. Like and subscribe for tomorrow's update. And remember, this content is for informational purposes only and is not financial advice. Always do your own research.